Folks, I want you to imagine for a moment a crisis so severe that banks are collapsing on an everyday basis. The FDIC having to go in and rescue bank after bank on a every day in out basis. Imagine financial institutions failing that were seen with hundreds of billions of dollars of assets that thought they could never fall. Imagine credit completely drying up around the world. Imagine home prices crashing so severely that no one could have ever foreseen a situation like this, where folks were giving up keys to their homes and saying it's not even worth keeping this home, something that was thought to never happen. That was this time period right here. Now imagine for a moment a situation in which the most famous city in all of the world sees two massive towers fall right in front of everybody. The worst attack to happen since Pearl Harbor. Imagine everybody seeing this all over the news day after day, the rubble of that week after week talked about across the world. And imagine that situation leading to multiple wars. Well, that was a situation that transpired right here. Imagine a scenario in which over 70 million people die in a war that involves basically every major country in the world. Imagine Europe in complete rubble. Imagine a world that really needs to be rebuilt. Global trade that is nearly shut down because people are trying to rebuild homes and rebuild cities. So they can't even think about buying a new this and new that, right? That was this time period right here. Imagine something maybe even scarier than all of that. Imagine the biggest cities in the world: Las Vegas, New York City, Paris, city after city, with no humans, completely empty, ghost towns, no cars driving up and down the street, nothing. It's like a zombie apocalypse happening. And there, all the beautiful cities are just sitting there with no humans anywhere to be found, right? That's what happened around 5 years ago now at this point in time. And that was that time period right there. Now, imagine a situation where inflation gets so out of control that the Federal Reserve has to raise the Fed funds rate to around 20%. We're not talking 5% like they did a couple years ago. We're talking the Fed raises interest rates to 20%. That was this time period right here. In today's video, I want to go over three core subjects. One, are we on the road to any of those freakishly insane situations that I just ran you through there? Are we on the road to any of that? Because that's a very, very popular subject out there right now, and we got to talk about that. Second, I got to show you something very important that happened today that no one paid attention to. No one's talking about this, and I'm like, this is massive. If you want to understand where the stock market's going, there's some huge things that happened today that's going to give you the breadcrumbs to kind of put the pieces together and what's going to transpire here, okay? Third thing we're going to get into in this video here today is stocks that I bought this morning. I plowed $50,000 in the market and I bought some stocks. We will go over that in this video here today. And this video was prepared. All these slides were prepared while I had 3 kids in the back seat, okay, fighting, making noise, talking about they're hungry, this and that. So all I need from you guys is for you to smash that thumbs up button on this video here today, folks. I hope you appreciate me preparing a video while going through the middle of the desert, okay? My wife was driving. It was a whole situation. I appreciate you for being here. Additionally, if you want to be subscribed to the channel, you can certainly subscribe here to the channel. If you're looking to apply, join my private stock group, private wealth group, get access to 1000xstocks.com, all my course curriculums, access to 1000x platform, all that good stuff. Pin comment down there today. Click on that, fill out a form, see if we can get you access to that a little later on this week, okay? Alrighty, folks. I want to start somewhere very important, and that's right here. Look at the Dow Jones Industrial Average. It hit a new 52-week low today. Not yesterday, today. Not only that, the S&P 500 also hit a new 52-week low today. Not only that, the Russell 2000 hit a new 52-week low today. We have all of the indexes across the board hitting new 52-week lows today. The NASDAQ also hit during the trading session a new 52-week low, and not just a small 52-week low. When that market opened today, the NASDAQ hit a massive gap down 52-week low. I believe that as of this morning at the lows, the NASDAQ was down around 27, 28% from where it reached highs just a few months ago, folks. That's how severe this has been, right? And speaking about the Russell, because I just showed you the Russell's now 1800, right? New 52-week low. This is a 4-year chart I'm showing you in front of you right now of the Russell 2000. Look at it. It's down 20% in the past 4 years. What a flippin' flapjack and disaster. No, this is a lost half decade for the Russell 2000. Because here's the thing. Let's say today the market bottomed. And let's say we just go on a risk-on rally and the Russell goes up 20, 25, 30% over the next, year, right? Over the next 12 months. It still will have been a lost half decade for the Russell because it still would have lost out. Like, you'd be lucky to have even gotten 1% gain. Not only that, if you look at it versus inflation, it lost by 1.5 miles. So you're basically guaranteed now a lost half decade in the Russell 2000, which is an unprecedented situation. It's not very often that you have a lost half decade on an entire stock market index. And that's what we have on the Russell 2000. That's a guarantee now at this point in time. Unless the Russell 2000 doubles over the next year, it's a lost half decade for the Russell, right? Never mind if it keeps going down more from here. Now, all eyes are on one man. One man. This man he loves when all eyes are on him. Trump. This whole story starts with Trump and the tariffs and all this drama going on. Now, Trump is threatening new 50% tariffs on China unless Beijing lifts its retaliatory duties on U.S. exports by tomorrow, right? The EU is worried. The EU's in a tough situation because they really don't want to put on tariffs because that could also be a tax on their at the end of the day, they're citizens, so they're in a really tough situation here. So we still don't know what the EU is going to do. Meanwhile, one of the most famous people in the stock market, Bill Ackman, billionaire Trump backer, Bill Ackman says America is on the brink of an economic nuclear winter due to tariffs. The last time we heard Bill Ackman talking this negative about things was in March of 2020. When the worldwide economy was being shut down. That's the last time we heard Bill Ackman talking like this. Economic nuclear winter. And I remember Bill Ackman just a few months ago when Trump was elected. He was talking so positive. And he thought, Trump was going to be the best thing to ever happen in the stock market. The best thing to ever happen in the business community. And now has he flipped? Now talking about an economic nuclear winter due to tariffs? Oh my gosh. Meanwhile, you got Besson now talking about tariff negotiations could last into June, right? And the stock market's like, what? June? That seems forever from now, right? Oh my gosh, do we have a whole situation here, right? Now, where does all of this lead, right? Because you hear the tariffs, you hear Trump, oh, he's doing this, Besson, oh, we're going to do this, this is not going to be a game that's wrapped up anytime soon. What does all this end up to? Well, the fear of what it leads up to is 3 core things, okay? And you got to understand this. 1, they believe that if this whole tariff situation plays out the way it's playing out, it's going to kill corporate profitability. If you kill corporate profits, then you could end up actually creating a big unemployment recession, right? Additionally, there's a belief that you're going to have a supply chain mess. And by the way, if you kill corporate profits, you kill the stock market because we know the stock market bases everything based upon companies' earnings per share. So if companies' earnings per share all of a sudden tank, the whole stock market tanks. Important. 2, supply chain mess. If all of a sudden all these companies have to get supply chains out of this country because a tariff is just at a ridiculous rate and it kills all their profits, so they got to move to this country or that country, it creates a supply chain disaster, right? A supply chain disaster that we haven't seen since, guess what year? 2020. Additionally, it all ends up leading to recession fears, right? Recession fears, ugly. And the thing that's scary about recessions is you don't know when it's going to end. No one knows when the bottom is for a recession. When does unemployment peak, right? We still have an unemployment rate right now in the United States. It's in the 4s. What if that climbs to 5s? Then are we headed to the 6s? If we go to the 6s, are we headed to the 7s? If we go to the 7s, are we headed to the 8s? If we go to the 8s, are we headed to double digits? That's where the fear is at, right? And that's what everybody is concerned with. But we have a situation here that could be much worse than what I just laid you out there. And it's this. The 10-year Treasury went up significantly today. This is worst case scenario. You don't want to see us have to deal with all these fears and worries and then a 10-year treasury that blasts higher like it did today. Hopefully this is just a one-day dilemma where the markets all went down, hit new 52-week lows, and the 10-year treasury went up. Because if anything, you want that 10-year treasury to crash while the market's crashing. You do not want a 10-year treasury, because you got to understand, the only good that can come out of all of this situation, other than hopefully long-term bringing back jobs back, manufacturing jobs back, all those things that Trump wants to do there, right? The only thing short-term that could be positive about this is rates go lower, right? Treasury rates go lower, the Fed lowers rates, things like that. The last thing you want to have is a 10-year going up right now. No. We need that 10-year going down, right? Now, you've got to understand, Trump is working under an immense amount of urgency right now. So if you're wondering, like, why are things happening so quickly here? Because you're looking out there and you're like, man, like, why do all these tariffs have to be so high right now? Why does this all have to be so insane right now? It's like everything has to happen today, right? If China doesn't remove this by tomorrow, we're going 50% tariffs up. It's just like, holy smokers, this ain't no jokers. Can we just slow down for a moment? But you got to understand, Trump has to work with a lot of urgency here. And here's why. Let me lay out exactly all the ramifications if he doesn't work with urgency. He needs to get this whole crash to happen, all the Fed to freak out, rates to go down, all this stuff. He needs to get all this mess done in the first half of 2025. So he's got a few more months to work in here, and he needs to get this crash and this, yields down, all this stuff. He needs to get this done like in the next few months, essentially. So then the recovery can start in the second half of this year in 2025, right? And people will start seeing, okay, we troughed everything. Things are starting to get a little better. Uncertainty is starting to be removed. Like, things are starting to get a little more certain. Businesses can start to plan a little better. CEOs can start to plan a little better. Everybody starts to feel a little more confident. Consumer confidence starts back, coming back to life in the second half of the year. AI investor sentiment gets stronger and stronger as the year goes on. All that stuff happens, right? And then 2026 hopefully ends up being a boom year, right? If you're from Trump's perspective, you want 2026 to be a boom year. And if you gotta understand, the news cycle moves quick, man. People's attention spans are lower than ever before, right? Most people won't even remember all this drama that's happening in the first half of 2025. They won't even remember that by the second half of 2026. And so Trump wants everybody to forget about all this stuff that's going on right now. He's going to want them to forget about this by basically the second half of 2026, if not even by the first half of 2026. And here's why. If you look back to what happened in the last midterms, okay, because you got to understand, midterms are going to be coming up in the second half of 2026, okay? Midterms will be on November 3rd, okay? So Trump needs to get everybody to be feeling great again, feel great about the economy, feel great about him, the work he's doing, the work Republicans are doing by the time midterms come up, okay? Because you got to understand, what happened in 2022, because you got to understand, like, the midterms that year happened also in November 2022. What happened in 2022? We had inflation that was out of control, and we had a stock market that was crashing. That set up the Democrats to be a bad situation for midterms. And the Democrats almost lost the Senate in that 2022 midterm. They barely clung on, they barely clinged on, right? 51 Democrats, won the Senate versus 49 Republicans. They barely were clinging on. And in the House, big L there, a brutal L. 222 Republicans, you need 218 for the majority and 213 Democrats. That, what I just ran you through there, that can happen to Republicans essentially, right? If, let's say, things go off the rails and this gets ugly, right, and stays ugly, right now, Republicans maintain a slight majority in the House, currently. But that could change. If things went off the rails, people will revolt and they will say Trump didn't know what he's doing, the Republicans didn't know what they were doing, right? Now, you got to always understand, there's a certain amount of Democrats that will always vote Democrat, don't matter what. There's a certain amount of Republicans that will vote, like Trump could put us into the Great Depression, and there would still be a certain percentage of folks that will still vote Republican regardless of what happens, right? Same thing on the Democratic side. But how you win elections, how you control who has the Senate, the House, all that stuff, right? The president, you got to get those people that aren't super loyal to one side to change their opinions, right? And so right now, Republicans are in firm control of the U.S. Senate as well. Listen, man, things could change. Things could change in a substantial way. Now, there's starting to be some nervousness, even from some individuals in the Republican Party. Not the ones that are super loyal to Trump, which there are some of those. The ones that don't really like Trump that much to begin with, they tolerate Trump. And they have to act like they like him because they don't want to turn off the people that are, very loyal to the Trump side, okay? But there's definitely some nervousness from some of those folks because you got to understand. And the question is now, do those folks turn on Trump or not, right? Because if Trump doesn't nail this thing, there's going to be a lot of seats lost on the Republican side come midterms. I mean, a lot of seats lost. So Trump has to nail this. He has to nail the negotiations. He has to get everybody to do what they want to do, right? And be able to say, look, we're getting this. The economy stayed fine. Now we're back to big growth in 2026. Look at the stock market's booming, right? Let's keep up what we have going on here and, try to obviously have a successful midterm. But if he doesn't nail it, I'm telling you, there's going to be a lot of seats lost across the board come those 2026 midterms, right? And here's the deal. Trillions of dollars of wealth has been wiped out in the past 6 weeks. That's not a small amount. We're talking trillions of dollars, right? And you got to understand, it's a lot of donor money, big and small donor money to the Republican Party has been lost just in the past 6 weeks, right? And so if Trump doesn't nail this thing, he sets the Democrats up to win for the next 10 plus years. So you got to understand, there's a lot at stake here that goes beyond just the economy in the short term and the stock market in the short term. We're talking about political control in the United States for like the next 10 plus years. Because if he doesn't nail this, the Democrats are going to have ammo for years to run off of and be able to show this is what the Republican Party did to you. They put us in a massive recession. They crashed the stock market, right? They thought they were going to save jobs and they lost massive amounts of jobs. They'll run off that for years and just keep talking about that. No different than George Bush set up Obama for an easy 8 years of elections, right? And honestly, Clinton was next up. Hillary Clinton was almost a guarantee to be right after Obama, which would have been 12 years of Democratic control of the executive office, right? And Trump came out of nowhere, and he hit a nerve with some folks that really liked him and some folks that really didn't like him. But the moral of the story is he was able to talk to some folks that felt disenfranchised and felt like they were forgotten, and he was able to pull off what a lot of people viewed as a miracle. He beat Hillary Clinton in that election, right? But you got to understand what happened with Bush, because when Bush left, the economy was completely in a crash. That set up an easy 8 years for Obama there, right? Now, there's so much online the next few months, and this is one of the biggest risks we've ever seen any political party or certainly any presidential candidate take. Because usually the name of the game when it comes to politics, you don't want to take that much risk. Usually the name of the game. You want to just kind of do a few things that you said you were going to do. Some of the bigger stuff that you said you were going to do, don't really try to do it because you don't want to take that big of a risk. And then also your party mates kind of reel you in to say, listen, man, we can't take that big of a risk because that could set us up for a horrible next 2-year election cycle, next 4-year election cycle, next decade election cycle, right? Because if you really mess up, the other party's going to run off your mistakes for years to go in the future. It's not like they forget, right? They're going to keep running off that. So we got one of the biggest risks we've ever seen. Now that leads us to Jerome Powell in the Federal Reserve. Because you got to understand, there's so much on the line for him. He's leaving in 2026. And from what I gather with Jerome Powell, this man cares immensely about his legacy. Immensely about his legacy. And the last thing Jerome Powell wants to leave with when he leaves office in 2026 is a situation where inflation's still out of control, or a situation where, let's call it, there's a recession going on. Because that's going to be a big stain on his legacy. People say, remember when Jerome Powell left office? Remember inflation was out of control? Remember there was a recession going on, something like that. He doesn't want that. He's a guy that got us through the 2018 mess, right? Got us through the 2022 mess, and then the 2022 mess, right? And so if he goes to leave office and we're in a recession, it's just his legacy is going to be forever tarnished. And I think he cares immensely about that legacy, right? And the Fed's legacy there. So there's a lot on the line here. You got to understand there's a lot on the line. Now, speaking about inflation, if you look at GSG is dead, right? And I gotta say, this is GSG in the past year, it's down 10%. And a lot of that loss is all in the past few months. And, everybody's talking about, obviously, the L's Trump's taking in regards to the stock market right now. But I think we've got to give him a W in regards to GSG right now, because he's winning. And if you want to know what sets up inflation, commodities is a massive amount of that. Everything in this world ends up coming back to commodities at the end of the day. You're not going to make anything in this world without coming back to commodities. It doesn't happen. And so I got to say, T-Man so far is winning the war on inflation, at least against GSG and against commodities, right? If you look at gas prices as of today, $3.25 national average. If we go a year ago, $3.59, right? So T-Man's winning in regards to gas prices. So T-Man's chalking up a couple early W's here, with obviously the big, massive L, which is a stock market right now, which has wiped out trillions of dollars. So he's got some small victories, and he's got one massive L right now. But the stock market can be very finicky. The stock market could flip the other way, and next thing you know, we have trillions of dollars of gains, right? So these are all things to kind of consider here, but there's stuff going on, right? No. Every time the market crashes, everybody says, this is game over. This is never coming back. It's over. Every time. There's never been a time period when, you got stocks crashing left and right. You have stocks hitting multi-year lows, right? Indexes hitting multi-year lows. I've never seen it, and it's never happened where people didn't say this was the end. We're done. This is it. It never happens, right? Every time they say this time is different. That's what they're saying again right now. This time's different, right? Trump's in office. We got one man doing all this. It's an unwind of global trade. Honestly, global trade's been a mess for a long time. People are just maybe waking up to that. But there's this whole thing, this time's different, right? Every time's technically different, but it all ends in the same result, right? There's no coming back from this. It's a fall of USA. I've heard that a million times. The American Empire, it's over. It's over. It's what they've said every single time over the last 100+ years, right? Someday that will be right, I'm sure, someday. But that's what they always say, right? Things will never be the same. Things will never be the same. They'll never be the same, right? I guess they never are the same. But at the end of the day, how does all this result, right? How does it all end? How does it all end, right? That's the thing. That's how it ends every time. That's how it ends, right? The sayings are the same, and the end result is the same. This is the end. Don't buy. We got another 50% down. We're going 70% down, 90% down. Worse than the Great Depression. And it always ends in the same result, right? No. Also, a lot of times when you're going through these time periods, people say international's a play, right? Look at the Hang Seng Index. Down 13% yesterday. It's down 15% in the past 5 years. That's your great thing? Now, come on, man. People try to mess around with international. Don't mess around with international. There's a reason international markets suck. Decade after decade. There's reasons, okay? A lot of reasons. And the reasons are, many of these other countries, people like to poke at the United States for the United States problems. I'm telling you, a lot of these other countries have way more issues, way more problems than even the United States. And so people think, international's a play, that's looking good. And then they get smacked hard. Just because the international outperforms the U.S. for a few weeks or a few months doesn't mean it's a better long-term play. No different than just because, safety stocks outperform big tech for a month or a 3-month span or a 6-month span doesn't mean safety stocks are going to perform better than big tech over the next 10 years. Okay? You got to understand that. Just because international might look attractive for a few months span does not mean international is going to do better than U.S. markets over the next 5 or 10 years. Got to understand that, okay? Any index can perform better than another one on a short-term basis. So over the long-term basis is what matters, right? Now, what always happens, right? What always happens? A bottom eventually gets hit in the market. No one calls the bottom, though, right? A lot of times when you're at the bottom or you're hitting the bottom, it's just a sea of negativity. People are talking about market has another 20% downside. People are talking about any short-term, let's call it bumps in the market up should be basically selling opportunities where people should be selling, right? No one ever like says, oh, this is the bottom, and everybody announces it and like comes to consensus, like, yeah, we hit the bottom, we're going up. That never happens. It didn't happen in 2022. It didn't happen in 2020. It didn't happen in 2018. It didn't happen in 2015. It didn't happen in 2008, 2009. It didn't happen in 2001, 2002. It never happens. It never happens. There's still going to be a lot of people that even when you do hit the bottom saying that wasn't the bottom, we got a lot lower to go. That's not unprecedented. That happens every single time. Every single time. 2, the market starts to rally, right? And people are unsure if the rally's real because they might have already had some fake out rallies where the market looked like it was rallying and then it went back down. So people are very skeptical of the rallies. They say, no, they're very skeptical of the whole thing. No, this isn't the real rally. No, we still got further down to go. This isn't real, right? We just witnessed it. Like, you could have just seen this game just play out a few years ago. If you look at the end of 2022 going into 2023, Wall Street was consensusly insanely bearish. They all believed we had so much lower to go. If you look at the price targets these folks had, so negative. Even going into 2024, the price targets were insanely bearish on the market. And the market had an absolute ripper year in 2024, right? But if you go back to the end of 2023, they were so bearish on the market. So they stayed bearish. And they were wrong and wrong and wrong, right? And by the way, they went into this year insanely bullish, and we know what's happened so far this year. So don't let any of these Wall Streeters tell you we saw it coming. No, they didn't. If you look at where all the price targets were from basically all the biggest financial institutions out there, all of their base cases was the market. If you look at all their base cases back in December and the beginning of this year in January, basically every single major financial institution had the market going up this year between about 5 and 15%. That was their base case. That was what they were expecting, 5 to 15% up. At this stage, we'll be lucky if we can go up 5 to 15% this year. Be lucky. And that was their base case, right? So they went in this year insanely bullish, and now they're starting to say, oh man, did we mess up again? But no one remembers that, right? I remember it. Now, additionally, right, fortunes are made over the next 2-3 years coming out. Like, that's what happens every single time. There was so much money to be made coming out of the great financial crisis. There was so much money to be made coming off of that major correction we had at the end of 2018. There was so much money to be made over the next couple of years coming out of Rona, right? There was so much money to be made coming out of the tech bubble popping. If you were buying stocks in 01, 02, 03, oh my gosh, so many opportunities. It was insane. So much money to be made coming out of the 80s mess we had. Every single time there's fortunes to be made over the next 2 and 3 years. And you get the best pricing you'll ever get when the market's in a crash mode. The best pricing you'll ever get. That's when the most money's made. The most money's made that 2 or 3 years coming out of a market crash. But you got to be buying when things look the ugliest. When everybody's just bearish, when everybody's talking about economic Armageddon, blah, 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 nuclear winter, oh my gosh, it's the end. And it's hard. For a lot of people, it's hard to buy during those times because they're like, this is so scary. Like, or you just gotta buy on faith, right? If you don't have faith, you don't have much in this life. You don't have much in this life, right? You got to keep it simple in the market when you're going through one of these phases, right? You got to buy the whole crash and then come out of that crash, the whole thing. A lot of people. And that goes into point 3. Avoid trying to time it perfect. A lot of people think they're so genius, they're going to be able to time it out perfectly and get in at the right time. And they're like, I'm not buying until the S&P 500 is down 45%. I'm not buying, blah, blah, blah. Man, you're going to miss it. You're going to miss it. Every time they miss it. They missed it in 2022. They missed it in 2020. They missed it in 2018. They missed it in 2015. They missed it in 08, 09. They missed it in 01, 02, 03. They always miss it. And they always say there's more downside ahead. We got lower to go. And they try to time it out perfectly. It's a fool's game. You buy the whole crash. When the S&P 500 is down 10%, 15%, 20%, 25%, you buy the whole thing. And if you have some sideline money, the more it goes down, the more you deploy that sideline money. And don't worry about just trying to get it at the exact bottom, because you're not. Right? You're never going to get it at the exact bottom. As long as you were buying that crash, you made a fortune. Show me one crash that you didn't make a fortune if you were buying it during that crash? It doesn't exist. It doesn't exist. There's not even one crash you could point me at where you didn't make a fortune as long as you were buying that crash. Whether it was a crash in the market that lasted a few months, whether it was a crash that lasted a couple years. There's never been one where you didn't make a fortune coming out. Not one. Not one. If we look at every single crash in history, you would be a happy buyer. If you look at every single bear market, you're like, dang, I wish I was buying back in that bear market, because look at what you have to pay for the indexes now. Look what you have to pay for the top stocks now versus what they were paying during that bear market there. It does, Second thing is more income than expenses. I preach this all the time. And if you watch my channel religiously, you know I preach about as much as anything. More income than expenses. As long as you got more income than expenses, you're always ready to buy, right? You're buying every single week, every 2 weeks, once a month, whatever it is, but you're always in a buying position, which makes you not very fearful of the market. I don't fear the market because I have more income than expenses. Same thing I've had for the last 16 years, right? Other than the 1 year I took off from work completely, right? More income than expenses is so dang key, because then you can always take advantage of the deals, right? Now, if we go back to that 2008 time, it was so scary. I mean, way scarier than this. Way scarier than this. Think back to 08, 09. Imagine people giving the keys to their house, short selling, foreclosing on their homes in mass, not like a few people, like massive amounts of them. People saying, it's not even worth keeping my home because it's that far underwater. Imagine banks going on down one after another, after another, after another. The biggest financial institutions that people thought these could never go down, going down, right? What a scary situation. People worried about the United States is going to become socialist, right? Capitalism's done. America's done. It's too scary, right? Much lower to go. Think about if you were just thinking like, what are some business models that have shown some great growth over the last few years that I think are going to grow a lot over the next 5, 10, 15 years, right? You would have probably thought about businesses like Netflix. You would have probably thought about businesses like nvidia. You would have probably thought about businesses like Amazon, like Apple, like Microsoft, like Google. You would have probably said, man, this Apple company, this Steve Jobs guy, man, he's turned that ship around over the last 10 years. They got this new iPhone coming out. I'm sure when the economy gets better, a lot of people are going to buy these iPhones. And, I think this amount of people are going to buy them, which is probably going to raise their revenue over the next few years. You're running your projections on 1000xstocks.com. It didn't exist back then, but you wish it did. You're running your projections like, oh my gosh, this Apple company is a great price, right? But you could have said like, no, I'm not going to buy it because Apple might go down a little bit more, right? You could have said that about all those stocks. Look at the gains you've gotten in those stocks. Netflix is up 23,000% since then. NVIDIA's up 20,000% since then. Amazon's up 4,600% since then. Apple's up 2,900% since then. Microsoft's up 1,200%. By the way, I wonder what Apple gains would be if Steve Jobs was able to run the company all these 15 years. That would have been crazy. Google stock is a L of the bunch, and that one's still up 437% over that amount of time, right? Insane. And you could have ran with all those scenarios. America's done. It's too scary. Much lower to go. Blah, blah, blah. Jeez. Just missed out on such an incredible opportunity, right? No. Public count now $2.5 million plus. And then I have all my private portfolios. Imagine if I just waited around, right? And I wasn't buying back when I started the market back in the great financial crisis. And I wasn't buying, all the corrections and crashes we've had over the years. You know what my net worth would be? I don't even know. If I wasn't investing over all this time and I wasn't in the stock market, I don't even think my net worth would be 10% of what it is. I don't even think 10% of what it is today. If I was just, putting money in a savings account or something like that. Like it wouldn't even be a remotely close to the situation, right? It'd be ridiculous. And so I could have waited, but gosh, would that have been a big financial mistake? So what do you think you're doing if you think you're going to just wait forever, right? You think you're going to have much money in 5, 10, 15 years? No, of course not. And your dollars are always being devalued, right? If this thing goes haywire and Trump really does crash the economy, right? You know what the Fed's going to do? You know what's going to happen to the value of the dollar then? Oh my gosh. What do you think they're going to do? They're going to print money like insane, right? We're going to go more in federal debt than we've ever gone, by far, right? If this thing really goes south. Come on, man. And so these are all things to kind of keep in mind here, right? The moral of the story is you see stupid pricing on stocks, which we've got stupid pricing on stocks across the board in so many great companies that have great track records, great management teams, have great long-term futures. You see stupid prices, you buy and you don't stop buying. You buy and you don't stop buying. I don't care if the S&P 500 is down 30%, 50%, 99.99%. You don't stop buying. You don't stop buying. You keep buying. You add more and more shares and more shares, right? Because once again, show me one crash where it didn't make sense to buy during that crash. It doesn't exist. Additionally, if you want a telltale sign of like, hey, you should be buying, loading the boat, if you ever see the VIX go to 30, 40, 50, you better be loading the boat. It's not a time period to like, be scared, I'm not going to buy. No. You see the VIX, the volatility index, go to that 30, 40, 50 range, you better be deploying money in mass. If you got sideline money, you better be pouring it in, okay? Loading the boat. What I'm showing you right now is a post I made on X. If you ever want to follow me on X, by the way, I always have it linked in the description area of my videos. So if you want to follow me on X, I've been posting a lot on there, keeping you guys informed of everything that's going on. You can follow me. It's in the description area, okay? Look at this. I posted this 7 hours ago. I said the VIX was over 50 earlier this morning. You've only been here a few times since the 90s, right? Where VIX went 50 plus. Times like the Great Financial Crisis, times like the 2020 worldwide shutdowns. The VIX 50 plus is the biggest buy signal long-term investors can ever get. Does the market do better over the next few weeks, the next few months? That's anybody's best guess. But as a long-term investor, show me one time period where it didn't make sense to buy when the VIX is 50 plus. Doesn't exist. And guess what? Every time period the VIX ever went 50 plus, you got a generational buying opportunity. Every time. Once again, it doesn't exist where it wasn't. It wasn't like, VIX went 50 plus and that wasn't a good buy. No. Every single time the VIX went 50 plus, generational buying opportunity. It's like and it doesn't happen very often. It does not happen very often. Like, look at this chart going all the way back to, probably around the time I was born, right? How many times did VIX ever go 50 plus during that time period? Only a few times ever. And when it does happen, whoo, baby, you better be taking advantage, right? Now, next up here, I want to show you guys something very important that happened today, and no one paid attention to this. And I'm like, you got to pay attention to stuff like this if you want to understand what the stock market can do and how quick things can change, okay? And then we'll get into some stocks I bought here today and why I bought them and $50,000 I deployed, okay? So, basically what happened today is was supposedly a fake report came out, okay, shortly after the market opened. And this report basically said something along the lines of essentially, the Trump administration is talking about a 90-day kind of, let's call it pause on the tariffs and some chill out time, right? Obviously, that's the exact type of headline the market's been looking for. Anything somewhat positive on tariffs, oh my gosh, okay? Boom for the market, right? So that report hits. And none of people really talking about like what happened right after that. The Dow Jones Industrial Average went up almost 2,000 points in a matter of minutes on a fake report. Do you see how quickly things can change? Can you imagine a Dow Jones Industrial Average going up 2,000 points in a matter of minutes? That's how fast things can switch, folks. And this shows you the speed that the recovery can happen if and when the mess ends in regards to this whole tariff drama and there's more certainty. You'll see rallies in the market that are going to flip your flapjacks and you're like, what is going on? How is a market rallying this much? And that's also the same thing that freaks a lot of people out because they think this can't be real. It's just got to be a fake rally, those sorts of things, right? Imagine if that report was real. And then shortly after that, it came out, the administration says, yeah, we're going to actually, pause tariffs for 90 days to reassess the situation. Would the Dow have been up 4,000 points today? Would the public account been up $500,000 today? You got to think that, right? Like, it's possible. It's very, very possible that could happen. Would we have seen stocks up 15, 20, 25, 30% today? Just today? Yes, we would have. We would have seen countless companies. Like if that report was real and it came out like that, Nike stock probably would have been up 35% today in one day. Elf stock probably would have been up 30+% in one day. That's how fast things can switch. And then all of a sudden you're looking, you're like, freak, I just missed a 30% upside move in the stock I wanted to buy. Like, what happened here? What is Trump doing? Is this real? Right? And so you got to understand, when the move happens back to the upside, and once again, that could be tomorrow, that could be next week, that could be next month, that could be 6 months from now. Whenever the move does happen, it's going to be extreme. It's going to be extreme. But that's not the only huge thing that happened today that I think people should have been paying attention to that they weren't paying attention to. Put to call ratio. In time periods like this, you have got to pay attention to put to call ratio. Now, usually the put to call ratio should always be under 1 because usually there should always be more people buying call options and put options. Because why? The stock market goes up and people like to be a little more optimistic and pessimistic in regards to the market. So if you ever see put to call ratio go over 1, it's one of the biggest buy signals you can ever get. Once again, show me a time period where put to call ratio goes well over 1 and it wasn't a great buying opportunity. Doesn't exist. Every single time the put to call ratio goes well over 1, you better be freaking buying stocks. You better be loading the boat. And that's what happened first thing this morning. First thing this morning, put to call ratio was insane. People were loading up on puts left and right, paying, oh my gosh, can you imagine the prices people were paying for put options this morning? With a VIX that was 50 plus, we had a VIX that was 50 plus, and oh my gosh. And you had a stampede for buying put options, traders must have been paying astronomical prices, right? Listen, that's another buy signal. When everybody is willing to pay any price for put options, another buy signal. One of the biggest buy signals you could ever get, okay? One of the biggest. Once again, it doesn't mean like that means we bottomed the market today or something like that. It's just like if you have any sort of longer term horizon, and you ever get an opportunity to buy when the put to call ratio is 1 plus, you better take advantage, okay? Now, if you look at the put to call ratio, I want to take you back to a very important time. November 24th, 2024, right? Shortly after the election, look at where put to call ratio was. It was 0.51, which means people were just loading up on calls because they were optimistic about Trump and, just going to go up on the market and those sorts of things, right? No one wanted to buy puts after the election was over. And so if you were buying put options like I was back at the end of last year and in the beginning of this year, right? Remember I had the Walmart put options, the Costco put options, Toll Brothers, right? You were able to get those put options for insanely cheap. And then once we started having that early downfall of the markets, right? Those ones appreciated so rapidly because I was able to buy them at such low prices. The issue with people buying put options now, because people think, oh, it's easy money if you go buy put options now. Not so fast. Not so fast. Buying put options now is way more risky than back when I was buying put options at the end of 2024 going into 2025. Way riskier now, even with all this fear out there. Because now you have to pay through the roof for put options. Because no one's going to sell you cheap puts now. You know why? Because everybody wants to buy put options and the VIX is insanely high. And so now you want to go buy put options on Amazon stock, Meta, whoever, Toll Brothers, Costco, Walmart, whatever the stock is. Plug in your stock. You are going to pay ridiculously high pricing. At this point in time, if you're going to play puts or calls, it makes more sense to buy like 1 or 2 year out call options now. Because a lot of people aren't thinking about a positive market now. So that's actually where you get more opportunity. You take a big risk still in that because the market could easily go another 10, 20% lower if, things go off the rails here. But now people aren't even thinking about calls, right? The thing about puts, the opportunities on the other side, right? And so you got to always kind of keep in mind in the market, you got to look to where everybody's kind of not looking at a particular time. Because everybody gets caught up in a looking this way. Sometimes you got to be looking the other way, right? Like a lot of times that pays off, especially if you're thinking about hedging a portfolio or anything in regards to calls or puts, right? Next up here, what are the stocks I bought? Why did I buy them? $50,000. First off, why did I, buy $50,000 worth of stocks? I'm not going to look at the market doing what it did this morning and not plug in money. I'm not going to look at a VIX that hit 50 plus today and be like, let me wait till tomorrow. If I'm more than okay if I don't get the bottom of the market, if I don't buy right at the bottom, more than okay. The public account has done insanely well over time, despite me never actually really buying the absolute bottom on a stock, right? I got some shares in Meta. I bought at 88.94. But you know what else I have? Meta shares I bought at 90s. Meta shares I bought in the low hundreds. Meta shares I bought in the mid hundreds. Meta shares I bought in the high hundreds. Meta shares I probably paid $200-300 for. I didn't buy all my Meta shares right at the bottom. I got a lot of them at the, toward the bottom, but not at the exact bottom. And that's why I'm perfectly fine. I'm looking at stupid pricing on stocks. Nike priced at $50 is dumb. Elf stock priced at $50, silly. EL stock, all these stocks I'm buying right now, it's silly where they're priced. And will I buy the exact bottom of all those different stocks I'm buying right now? Probably not. And I'm perfectly fine with that. Because the risk reward is so attractive over the next several years with those stocks, I don't care if I buy that exact bottom because I don't need to. I'm going to make so much money in those stocks over the next few years, regardless of if I get the exact bottom or not. It's irrelevant. It's all irrelevant in the end. No one looks at me and says, Jeremy, what a legend you are for buying Meta at blah, blah, blah price. All they say is, dude, you're a legend for making so much effing money on Meta. They don't say, did you buy all your shares right at the bottom, Jeremy? No. They say, damn, you did good on Meta. Same thing with Tesla, the shares I bought back in 2019. They don't say, Jeremy, did you buy all those shares right at the lows? No. They say, damn, dude, even after this recent crash in Tesla, you're up like 1,600%. Legend. They don't ask me, did you buy all your Palantir shares at $6 at the lows in 2022? No, they just say, dude, even after this Palantir crash, you're still up like almost 1,000% on Palantir. Legend. That's all they say. No one cares if you buy right at the bottom. And for all you guys at home, should you care about buying stocks at the exact bottom? No. Because if there's really that much opportunity in that stock, it's irrelevant if you bought it at the bottom. Because there should be so much money to be made in these stocks that it doesn't matter in the end. It doesn't matter in the end. And that you got to let sink in, okay? Who cares about buying the exact bottom? I don't care. All I care is that I'm stepping in, buying heavy when I need to be buying heavy. What did I buy here today? 111 shares of Cake at 45. I bought 111 shares of AMD at 83. I bought 222 shares of EL, Estee Lauder at 52. I bought 222 shares of Elf Beauty at 53. And I bought another 222 shares of Nike at 54. Might not be the bottom for those stocks. Cheesecake might go to 35. AMD might go to 73. EL might go to 42. Elf might go to 43. Nike might go to 44. I don't care. There's so much money to be made in those stocks over the next few years. Whatever. It's irrelevant in the end. All that matters is that I'm going to make a lot of money on Cake and a lot of money on AMD and a lot of money on EL and a lot of money on Elf, a lot of money on Nike over the next few years. And I'll pat myself on the back and say, great job buying in the crash of the first half of 2025 over the Trump tariff drama. Man, that was crazy, right? Thank you for buying, Jeremy. That's all that's going to matter, right? And same thing for all you guys at home. You got to buy during the crashes and then you make stupid money on the other side of it, okay? Appreciate y'all for being here as always. Hope you enjoyed today's video. Hope you got a lot of value out of that beast. Once again, prepped that video in the middle of the desert for you guys, okay? I hope you appreciate it. If you want to learn from me on a much deeper level, you want to access my private stock group, private wealth group, get access to all of my best course curriculums, pin comment down there. You can click on that, fill out a form. We'll see if we can get you access to that maybe a little later on this week. You also get access to my private Discord chat, exclusive weekly videos from me, 1000xstocks.com, the premium software I use on a daily basis, all that good stuff. Much love and have a great day.